Anytime, any day. Why not right now? Stop looking up to your boss and start being your own boss. Don't work for paychecks. Work for dreams with no regrets. This is Cracking the Entrepreneur Code. If you have the passion, we'll create the blueprint. Now, your host. You know him from his 7 tips to build the business you always wanted, and now you're about to hear a lot more. Jack H.M. Wong.
Welcome to another episode of Cracking the Entrepreneur Code. And I'm your host, Jack Wong. And you know what? Today we have an expert of numbers. Her name is Ruth King, and she is agreeable to come to my show and just a little bit about Ruth's background. She actually owns and has owned 8 businesses in the past 36 years. And she has had businesses succeed past her wildest dreams and crash as hard as possible. And in addition to her businesses, she also helps business owners understand profitably use their financial statement information. UK-based Fapping.com actually named 2 of Ruth's books, and I have the chance to flip through them. The Ugly Truth About Cash and the #1 best-selling book, The Courage to Be Profitable. As part of the 37 books startups should read along with those famous books such as Napoleon Hill, Stephen Covey, Dale Carnegie, Richard Branson, and other distinguished authors. We are so happy that Ruth is here to share with us this important information called the numbers. Ruth, how are you today?
I'm doing well. Thank you for having me. I'm excited to be here.
Well, you know what? My shows have audiences. Like before we started this interview, I shared with you a little bit of the backgrounds of my audiences. Like most people who start a business because of an idea or because they're not happy with their job, I mean, this is kind of like very common thing. But there is also a very common thing amongst this group of audiences I have. If you ask them numbers, financial information, or profit and loss account, suddenly we'll hear a moment of silence. And nobody knows what's going on. It's kind of like speaking to them the alien language. So when Ruth kindly gave me 4 books, and I had the opportunity to go through 2 of them, The Ugly Truth About Cash, and this book, which is called The Courage to Be Profitable. And what is fascinating about this book, when I saw it, is like the table of contents says that, hey, first of all, read this first. As a lawyer, I follow the rules and I say, okay, read this first. It is a tale of 2 business owners. And I will let Ruth explain this further, but for information of the audiences, this is a representation of 2 companies, Company A and Company B. So with my understanding of the story in just 1 minute, Company A started off very well. He has tenfolded his revenue after the son has taken over from his father. He's doing exceptionally well until one point where because of some yield moves, the business has turned upside down, and within a very short period of time, the company has disappeared. And on the other hand, we have got this company called Company B. Interestingly, the owner, by the name of George, who is also succeeded the business from his father and uncle. And he doesn't know what is financial statement. But what I like is that he said that he has surrendered himself to learn quickly about profit and loss statement, balance sheet, and what they meant. I can imagine it is a very difficult task, but he did that. And therefore, the business was a successful one. So Ruth, can you give us the key lesson of Company A and Company B?
I would be happy to do that. The Company A is the owner took over from his dad. Both of these companies are exactly the same from that perspective. And he grew the business to, as you said, tenfold the business. The sad part about it is he understands profit and loss statements because he was a credit manager before he took over his dad's business. And he understood profit and loss. He understood balance sheets. And he watched the business go down. He watched it, go from 15 million to 10 million and, basically go out of business for all intents and purposes. And this is why I call it the courage to be profitable, because he understood the financial statements. He understood what they were telling him, and they were screaming at him to do something. and he just didn't have the courage to do it. And so as a result, he lost the business. So it's not only understanding the financial statements and what they're telling you, you have to take action on what they are telling you. Otherwise, you could have this particular situation happen again. And as you said, in George's case, George took the business over from his dad and his uncle, but in the business, he had only been in operations. He had never seen the financial statements. He had never written a check, any of those types of things. And dad and his uncle come to him and say, okay, you want to buy the business? And he goes, sure. Of course, he's the typical entrepreneur like we all are. We're all entrepreneurs here. And so he starts looking at the P&Ls and the balance sheets, and he doesn't understand them. And he's starting to have cash flow problems because he does understand he has to write a check for payroll. And so he's having problems, cash isn't coming in the door like it should be occasionally. And he's having some problems. He said, look, I don't understand anything about this. And he calls me on the phone. And it was not as difficult as you might think it was, because the basics of accounting and P&Ls and balance sheets were actually invented in around 1300 by the Venetian monks, who had to take care of the rich Italians' money. So they didn't have calculators, and they weren't talking to the Chinese who had abacuses. And it's actually, it's like learning a little bit of a new language. It's not that hard once you get it. But anyway, George basically, bit the bullet, raised his hand and said, I don't get this. And I need some help so that I can obviously keep my business going and, keep the roofs over a lot of my employees' heads and food on their table and et cetera. And so he got the help. We did his pricing. He now reviews his financial statements, and they've done phenomenally well simply because he reviews the financial statements. He goes, okay, we're not doing, let's work on this. Or we're doing phenomenally well in this area. Let's keep it going and keep doing what we're doing. So I guess the story between the two is, number one, if you don't understand them, it's not that hard, get some help. And number two, if you do understand them, please, 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 if they're telling you things that are going wrong, do something about it.
That's very important lesson, because I flip to the book, the next page, which is the introduction. I pick up two particular quotes. The first one is the first line. It says that I have to look at a financial statement. No way, that's Greek to me. This is a common complaint amongst most people who are not accountants. So that struck me. Turn to the next page, which is this part. It says that unless you are an accountant or bookkeeper, you've got to learn this part of your business. It means that, not knowing financial statements because you are not an accountant or CPA, whatever, is not an excuse. You've got to learn the financial language in order to be able to make profits in the business. So I'm just splitting these two quotes, and they are like standing out to me and say, please read Jack, you need to understand this. You have to ask Ruth these two questions. What the heck is this financial statement? Why is it important? So that's why I said, this interview, I want to deep dive the concept of profitability, because you have said in the book that profitable business doesn't mean that it has cash. And I would like to just start off with this concept. What's profitability, and why is profitability more important than cash?
I'm going to answer that question with a story, if I might.
Sure, go ahead.
A business owner who I know had very, very profitable. He was a very profitable business owner and had great profits for at least 10 years. And then 3 of his customers went out of business on him within a week. No joke. It just happened within a week. And leaving him holding the bag for $1 million in receivables. And he didn't have the cash to be able to fund, obviously, payroll and the things that need to be paid. And it took him out too. So you can have a very profitable business, but profits are not cash. Profits are turned into cash when you collect for the work that you did. I mean, he had been billing for years and years and years, and his customers were paying him, and everything was happy. And all of a sudden, 3 of them went bankrupt within a week. And then he had billed them for the $1 million, and he didn't have $1 million in the bank to cover it. It made him go out of business too. So the key is really and truly understanding that, yes, you've got to, number one, have profitable sales, i.e. that if you sell something for $1, you have to have it cost less than $1. And so you have a little bit left on the bottom line. But you also have to collect for that sale. So profits are profit, but a profit, like you can have tremendous profits and no money in the bank, or you can have a loss one month and have a lot of money in the bank. Now, multiple months of losses cause problems, obviously, but 1 month or something like that, it's okay, because as long as the money keeps coming in, i.e. from those sales, and you're collecting on those sales, 1 month of non-profitable business usually doesn't hurt you. I'm not saying it never hurts you, but it usually and truly does not hurt you. But you've got to turn it around by the next month. And that's why it's so important to get your financial statements every single month so that you can look and say, okay, why weren't we profitable this month? Did we have too much overhead, i.e., paying for not enough sales? So, for example, every month we have to pay the rent. Every month we have to pay the light bill, whether or not we sell one drop of product or service. And so we have to sell enough to not only cover the cost of creating those products or service, but also to pay a little piece of the overhead for each sale that we have. And so there's actually two parts to the cost. The first part is what's called direct cost, i.e. the cost, like if you're selling a widget, how much does it cost in materials and labor to create that widget? And then after that, you've got to take a piece and have that widget pay a little piece of the overhead too. So it's both of those things. It's not only the cost of overhead, but it's also the direct cost for producing that widget. So the total thing is understanding that, okay, we have to have profitable sales so that we can have positive cash flow coming in the door, which means that we will have cash to do the things that we need to do and to keep our business afloat.
I see. It sounds very complicated if I don't really know what is accounting or financial accounting in short, because the first thing that I learned from accounting is that there's this thing called income, expense, and you mentioned direct costs, indirect costs. And I guess most people, when they hear all these jargons, I will call it the technical jargons, they're actually freaking out. And their minds shut down. They don't want to listen to your discussion anymore. So how do we actually make it simpler so that less resistance to these people in understanding what the heck we are talking about?
But in reality, I don't know. In Asia, do kids have lemonade stands in Singapore and in Asia? Okay, so let's assume we have a lemonade stand, right? And we're going to make the lemonade, and we're going to charge our customers, let's say 5 cents for the lemonade. Right? And so what we're doing is if each glass of lemonade costs 5 cents, we have to have the cost of the lemonade, and that has to be less than 5 cents. So that's what direct cost is. It's the actual cost of producing what you're doing. And I think most people would understand rent. We have to pay our rent, or we have to pay our light bill and something along those lines. So we do that personally. We all live somewhere. We all have a light bill payment and a gas payment or whatever else it is. And so in a business, we've got to pay that. If we don't have a job, for example, we got to have the savings somewhere to pay that, right? Mm-hmm. You don't want your electricity to be turned off because you don't have a job and you don't have any income coming in, so that you've got to have the savings. Well, it's about the same thing on a business level. If you don't have the income coming in, you've got to have savings somewhere to pay for those months where you're not getting revenue.
So essentially, we can actually use some metaphorical stories to understand this jargon. So guys, listen, you don't need to learn the lingos like us, because they are very technical. However, you just relate to stories like lemonade stories, which is a very classic one in the accounting industry when we pick up the accounting, and you are able to understand the essence of cost, expenses, and income, sales. These are very simple jargons after all. So let's move on to the other part of the discussion. You also said something like you need to have the financial statements ready and timely financial statements ready. In other words, I remember you just said as a business owner, you want to review the financial statements on a monthly basis. Like, what is the essence of having a timely financial statement? Why is it so important?
Okay, let's assume that you have financial statements and it's June, like it is. Well, it's July now.
Yep.
But let's say that you're reviewing April's financial statements. If you're reviewing April's financial statements in July, something could have happened in May and June that you just don't know about simply because you haven't looked at the financial statements. If you're several months behind, any minor issue could have become a major blow up. I think one thing that also gets people confused is that I don't expect business owners to become bookkeepers, i.e. responsible the day-to-day debits and credits. That's what bookkeepers do. But I do expect business owners to be able to look at a financial statement and say, okay, that looks right or that looks wrong. And if that looks wrong, bookkeeper, please bring me the backup to show that that expense really was that high. So you're looking at where you are from a business owner perspective is one of oversight, which means, yes, you have to understand the format for a profit and loss statement. And I think we've kind of gone through that. You have to understand a little bit about a balance sheet, and I can talk about that if you'd like.
Okay.
But you don't have to understand the minutia of how every single number got put into that P&L or how every number got put into that balance sheet. You just have to look at it and go, okay, I get that. That's what this is telling me right now. I'm doing great, or I better, figure out what's going on here and fix it before it causes major problems. The bookkeeper is responsible for producing accurate financial statements by the 10th of the following month. And really, really good bookkeepers mortified when they make mistakes. They're absolutely mortified because they pride themselves on creating financials that are accurate. That's what they do. And it's your job to make sure that the balance sheet balance is number one. It's your job to see if you see negative numbers, number two, to start asking questions and asking for backup. And that's what your job as an owner is. I don't expect owners, unless you want to become a bookkeeper, which most of us don't.
Yes, of course not. So having a highly qualified bookkeeper, very trustworthy bookkeeper is pretty essential in this process, isn't it?
It is absolutely essential.
Yeah.
I mean, you got to do what you do best, which is probably not doing the books.
Yeah, of course. I mean, it's having a bookkeeper who come up with the numbers. And I'm hearing from you just now, what you're saying is that as a business owner, I just need to do some analysis, making sure the numbers looks right. And I'm able to spot the issues if I can and ask questions. I mean, that's the essence of a business owner's job when they review the financial statements. You mentioned financial statements consist of things like income statement or profit and loss account and then the balance sheet. So just out of curiosity from your perspective, like
the balance sheet is more important than the profit and loss or the income statement. Both of those terms are used interchangeably.
Yes, of course.
Because the balance sheet tells you about long-term profitability. And you're going to say, wait a minute, my profit and loss statement tells me about profitability. But it does only for a month or only for a specific period of time. Your balance sheet actually talks about the history of your business from the time you started your business or bought it to the time you dispose of it or sell it or it closes its doors. Because the balance sheet, through what is called retained earnings or that amount of profit that you keep in the business, as long as retained earnings keep going up, your profitability will keep going up as a general rule. So the balance sheet tells you whether you can pay your bills on time. Your balance sheet tells you whether you're taking on too much debt. For those of the listeners in your audience who have inventory, it tells them whether they're building up too much inventory. So those are the types of things that the balance sheet actually tells you every month. And you think, wow, am I able to pay my bills or not? And that's, I think, just as important as whether I have profit or not.
Yeah. I learned from my teacher that business owners who do not prepare financial statements are really poor management of their cash as well as their profits because they have no clues what they have in terms of cash and profits. You ask them, how much cash do you have? They will just simply respond and say, well, you know what? I don't know. Or let me figure out and come back to you later. I mean, that is how I know whether the business is running well or not. When I'm working with someone in terms of whether I should work with that person, the first thing I want to find out is that, does the guy actually prepare the numbers? Because if he's not a numbers guy, I don't know whether I want to work with that person. No matter how big the opportunity potentially is, I'm a bit cautious in that sense. This is from my experience. The other part to feel the audiences here is the dilemma between the balance sheet and the income statement. Actually, both to me are important because they are part and parcel of the financial statement. The income statement with the profit and loss account will tell you what is the periodic profits. The balance sheet is the one that tells you what is the long term. So both must be prepared. From my teacher's mouth, he said to me, if the person knows how to only prepare profit and loss account but no balance sheet, I mean, this is what my teacher has taught me. It's a red flag for those people.
I would agree.
Okay.
The balance sheet, any bookkeeper should be able to present and create a proper balance sheet. Now, you can really tell whether a balance sheet is wrong in about 30 seconds. If it doesn't balance, if you have negative cash on a balance sheet. You can never, ever have negative cash in your business, because I don't know any bank that allows you, that will pay your bill for you with having the cash to pay those bills. I mean, it just doesn't work. They don't allow negative bank account statements. So negative cash, if you have negative loan payments or, anything that's negative on the liability side of the balance sheet, as a general rule, somebody is either cooking the books, i.e. not doing things right, or stealing from you, or they are just don't know what they're talking about.
Yep.
And if you have a bookkeeper who is incompetent, get rid of him or her.
To continue cracking the entrepreneur code, subscribe for more episodes and download the Amazon bestseller, Cracking the Entrepreneur Code, 7 Tips to Build the Business You Always Wanted at crackingentrepreneur.com. Learn more about author and host Jack H.M. Wong and book your 30-minute discovery session to overcome any professional challenge at jackhmwong.com/apply.